Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Philip Lee, one of Ireland's fastest growing corporate law firms and expert advisors at the heart of the Dublin and London startup, fintech, and crypto communities. Just a heads up before we dive in, this is our mid-summer episode for August, and we'll be back with our regular weekly cadence come September. As for this week, Eoin Fitzgerald and I riff on my trip to the US last month with the sheer ridiculousness of the 8 different combinations of point-of-sale authorizations I experienced with a single Revolut card in 2 weeks, Starling Bank's re-prioritization of a presence in the Irish banking market, the hunt for crypto talent by EU regulators, Vitalik's view on giving people what they want in the Metaverse, fintech microlender Umba's deal for Daraja lending, and Tomo Credit's big round to make credit scores obsolete. All right here on Money Never Sleeps. Hey, Eoin.
Hey, Pete.
How you doing?
Not too bad. It just dawned on me, actually, as we're introducing there, we've got the same color T-shirt going on as well.
We do. We do.
This green.
If we only had the same color hair.
Well, do you know what? My next comment was going to be, actually, I'm due to go back on Friday to get the hair dyed, and then we'll have the same color hair, because I'm kind of going for that white look.
Yeah, there we go. No, you should. You should.
I think yours went whiter in the sun on your holiday, did it?
It did. It definitely did. And I'm actually gel-free this evening, because
okay,
I had a late walk, my big walk up in the hills here in Stepaside. Was a little bit later in the day than expected, with the kids home, not in camp, not in school.
Yeah.
So, it was 5 p.m. instead of, 7 a.m. or whatever it is usually. But
yeah,
I know this is obviously our first time doing this monthly, and had the good break back in the U.S. and with family, with friends, had a really good time, and lots of time in the water, in the waves, at the beach. The kids loved it, had a great time. So,
brilliant.
But yeah, we pick up this episode for the month of August, take another few weeks off, and then pick up in September.
Oh yeah, sure. It's nice for those of us to get to go away.
Yeah, I know. Well, I needed it. I didn't go anywhere.
Of course, I'm joking.
I didn't go anywhere for the first half of the year. Zero, nothing, zilch. But no, sorry, we did do a long weekend attached to a bank holiday in Barna, in lovely Barna. Shout out to Dave Cunningham.
Empty a beer that weekend.
Yeah, it was a good time. So, speaking of the U.S., I wanted to start tonight with my observations from the ridiculous number of payment processes that are in the U.S. And this came from my trip. And we were over there for 2 weeks. Yeah. And before I left, I took my spending money for the 2 weeks, and I converted it on Revolut from euro to US dollars, right?
Okay.
Pretty much one for one, which was the first time that's happened since, 2002, where it tipped way below 1-to-1. Yeah. In general, I was trying to use Apple Pay as much as possible, and only really 75 to 80% of places accepted that. So here's the rundown of the rest of the combination. So I used to use Card Tap a lot in Ireland, and then stopped using Card Tap so much because Apple Pay just worked just as effectively and it was easier. Yep. So what I found was that in the US, I didn't need to use the Card Tap either, because if you could tap, you could use Apple Pay, because it's got the card is an NFC chip that for tapping, and Apple Pay has an NFC chip embedded in that as well. Okay. So the second thing was using that same Revolut card with a PIN, because they wouldn't accept Apple Pay, they wouldn't accept tap, but you could put the card in and you could put your PIN in. Now, certain things happened after that. Either just the card with a PIN was accepted, fine, transaction done, or you had to also sign the screen. So you put in your card, you put in your PIN, but you also got to sign. But conveniently, it's a nice screen that you sign, such as at places like CVS, Consumer Value Store. Wonder how many people know what that means anymore. And then you go on your way, your transaction's done. Some of it is you put in your card, you put in your PIN, but then you need to sign a paper receipt. That was some of the other options. At the fish market, the lovely fish market in Point Judith, outside of Narragansett, or in Narragansett, Rhode Island. All right. Also had the swipe. So they actually swiped my Revolut card, and I had to do the paper receipt sign at a different place completely.
Was that where they ran it down the side of the machine?
Yeah.
Oh, God.
I was waiting for them to bring out the knuckle buster, right? That thing that you just move back and forth.
The imprint, yeah.
Yeah, the carbon copy. Then we also had an experience where we had to write down the card number on a piece of paper, and with my email address and phone number, which was kind of scary as hell. I'm like, what's going to happen to that piece of paper? And with this, with the security code, not the PIN, but the CVV, and the expiration date, and because there was a power outage. So we were in Lenox, Massachusetts, in the Berkshires, lovely place. If you ever want to check it out. And, in the middle of some huge, massive electrical storm, and the power went out. So they had to take my number down and key it in. The next day when the power came back up, they sent me a picture. Here it is. We put it through. And I said, can you tell me what you did with the details? They're like, I put it through the shredder. She said, I put it through the shredder myself.
Okay.
So that was the last one. The interesting thing was the final payment method, obviously good old fashioned cash. Some places like here in Ireland and like some places in Europe only accept cash, right? So that was the last one, which was we were going swimming at this place called Laurel Lake in Lenox, and I needed to pay a $5 to get into the car park so that we could go swimming. And I had to go find an ATM. Parking lot attendant, I said to the guy, like, do you know where the closest ATM is? He's like, no, but Google will. I'm like, thanks, pal. Went off to an ATM, got the money, came back to the car park. I ended up having a $5 bill in the secret pocket in my swimming trunks from 4 years ago, the last time I was in the US wearing that swimsuit. Long story.
That's crazy.
And
That's
just a heads up, do not try to prepay gas with Revolut at a gas station. It does not work. The whole process gets confused. You got to go inside. You got to wait in a line. You need to have the cashier run it through and all these different tricks, sign a few things, put in a few pins, tap a few things. 10 minutes later, you're done. So this is the state of payment systems in the US compared to what we have over here in Europe, which is just so much cleaner.
Yeah.
And I don't see it going anywhere soon, just because it's obviously such a big country with so many different old archaic payment systems that everybody's just continuing to use. And because so many people just carry around cash as the backup, it's always just there that people just use. And here I stopped carrying cash, almost completely.
But I suppose that's a really good live example of, why there are so many neobanks and, Cash App and equivalents and Zelle and PayPal and every other payment method still springing up over there, because there's still that need for, different options.
It is. It is. I heard about another one, Grasshopper.
Yeah, actually, I had that. I was going to send that on to you to discuss tonight. I forgot. I lost the link now.
Yeah, it was an SME bank that just raised, I don't know, 130 million worth of funding with a very non-diverse looking management team and board, which, isn't surprising to Middle America, but, not that that's an excuse. But they are, I'm just like, you need another one? When we barely have any banks here in Ireland to pick from anymore.
Yep.
So leading on to the first story, Starling Bank, we missed this back in July.
Yeah.
Because we weren't recording anything. I wasn't even reading anything while I was away.
Yeah.
And so completely missed this. And thanks for sharing that with me today. It was from RTE News that Starling Bank pulls plans to offer services in Ireland. So I think it was a couple of years ago that they started the application process with the Central Bank of Ireland. All of this obviously in the article. And just got to the point where looks like they were in the final stages and just pulled it. So one of two things happened, or a little bit of both. One, they had made so much progress with their banking as a service play, or Starling as a service, I think, as they're calling it, and saying that they've spent so much money and spent so much time and done so well with building their own native banking platform that they're just going to license that, basically white label it, which is banking as a service, kind of, right? And, or two, they just kind of got to the point where perhaps they continued to do some economic analysis on the profitability of having an Irish-based business. And it is a country of 5 million people, and that's it, which is, there's cities in the UK that are bigger than the entire population of Ireland, right? So did they look at that from an economic situation and say, or a P&L perspective, profitability perspective, even though they were going to run the European strategy, the European Union licensing out of Ireland, and say, hey, just not worth it.
So
what do you think?
Are they licensed as a bank then?
In the UK?
In the UK
No.
only? Yeah. Okay.
UK only.
Probably comes down to, I mean, it probably comes down to looking at it economically, ultimately, then. It's just funny because they announced their most recent results as well in the last couple of weeks. And one thing that stood out for me was that they showed profitability, but what I think they were like 30 million of losses, but like 31 million of money from the government because they were, of income or whatever. It wasn't called or defined as income in that way, but it was the government money that they were obviously being paid to put out, the government COVID support schemes or whatever they were issuing to businesses.
Yeah.
And that effectively made up the loss, turned them slightly profitable. So they're obviously doing very well out of the UK, and having that kind of government engagement and contract and whatever it is that they have obviously been very beneficial to them. It was an interesting move though, because you only have to look across to the US and you look at SoFi and who was it we were talking about recently? It was one of the German banks again that had gone down the route of a license, and it talked about actually the positive impact on their bottom line, ultimately on the cost of funds, and how that had helped them turn a corner. And you see it in the US with the companies going after the banking charters and stuff, that it's really helping them kind of drive profitability. So it seems like, I don't know, it seems like a strange one that, maybe they just decided to row back on it because of the cost and the timing and everything else, while they're, like you said, building out that banking as a service platform and whatever else.
Yeah. And just to bang on something that Simon Taylor keeps saying is, would Revolut be better off not as a bank? Right. Yeah. And, they're in the UK. They had an e-money license here in Ireland. Right.
Yep.
And they had pulled their banking regulation application and decided they weren't going to do that, and that they were just going to operate in Ireland, not on an e-money license, but on their Lithuanian domiciled European banking authorization. And, as a Revolut user, I was given notification, would you like to switch over from your e-money institution
to Revolut Bank,
usage to the Lithuanian? And I switched over. I have Lithuanian heritage. It's fine with me. So, maybe there is just this growing wave of, hey, we're in financial services, we're in banking, we are, Revolut's not yet profitable, but Starling clearly are. Do we need to actually carry all the cost and weight of a fully licensed bank in order to provide the services that we do? And does that restrict our opportunities? Does that restrict our product development? If we don't have a banking license, and are there going to be ways to continue to grow and to scale and to build a business without having that banking license? And I think the answer is clearly yes.
Yeah, absolutely. Like a comparison, I'm working with a client at the moment, and they're 15 months into their kind of virtual asset authorization here out of Ireland. And, it's taking time, it's costing money. But the last feedback they got, there was another kind of 90 or so questions that they had to respond to, which is going to add another 4 or 5 months to the process. So if you multiply, and that's just for obviously an authorization as a virtual asset service provider, you multiply that to the magnitude of a banking license for Europe, and presumably the likes of Starling and others are going into this with an idea of a timeline, and it's dragging, and the costs and everything, and it ends up, like I said, is it really worth it from a profitability point of view, from a scale? Is it going to really impact on their ability to offer the products? Probably not. Maybe it's a cost benefit thing. Well, do you know what? If we want to offer that product, we'll just partner with somebody.
Yeah, exactly. And
let them take the pain.
Yeah. I mean, personally, I was deeply saddened because I was really looking forward to having Starling be my main banking option for both business and for personal use. And, now that's no longer an option. I've been, with it still just finally Bank of Ireland got Apple Pay, I don't know, last year or whatever it was, but I don't use it. I use N26. And then, I still can't get a notification on my business account when I have a client pay. Yeah. It's like
crazy.
Oh,
I know.
I still have to go into that stupid app where you have to put in your PIN, like with every single action you take on the system. And I need to actually, and I'm happy to say this now that Dave Tighe is no longer with Bank of Ireland. He's moved on to KPMG. So shout out to Dave. Hopefully we'll get to catch up with him soon.
But look, it doesn't bode well for the Irish market, obviously.
It doesn't.
Like, Revolut have 2 million customers or so now, they're saying.
Nearly 3.
Yeah.
No, it is 2. It is 2 million.
Yeah.
And 26 are providing, a great service. I
see Bunker looking for a country manager here, so they're obviously expanding their presence and they're offering here as well.
Yep. And I'd say the more and more crypto players that are here that have the consumer finance type offerings around debit cards, we're going to see those continue. Obviously that's a longer term play with people being more comfortable, converting from fiat to stable coins for their day-to-day spending. But there's, a long arc to that.
Yeah.
I am worried about the banking options here in Ireland. Obviously there's no existential threat to the Irish nation from having only 3 banks left, but it's just, and like you said, everyone's moved to Revolut just because if you want a better UX, a better user experience, you just move to, a fintech bank. And if you want that, oh my God, yes, copper fast and strong security, and safety of being in an Irish bank, and that less and less people care about that, then, you keep the majority of your wealth.
We manage a lot of our household expenditure through our joint kind of Revoluts and using the vaults and everything to divide everything. Like when salary comes in, I send X amount across my Revolut. My wife does the same. And then we manage everything else. Like I don't even look at my usual permanent TSB account that much anymore because the day-to-day stuff goes through the Revolut. Because it's, like I said, it's really easy to use. It's very, user-friendly, but obviously offers a lot of functionality. And then, like I see Kira, and she's trying to send money, and she has to take out this little gadget that she has to stick the card in, this card reader thing that AIB have. And it's almost embarrassing.
Oh, yeah. I was thinking about that today. No, there's so much old school. Some of this stuff is, I would say that card reader isn't regulatory focused, but some of it is regulatory driven. For example, there is still something in Irish regulation or Irish law that says a financial services business that has face-to-face relationships with their customers is, I don't know if it's preferred or if it's stated as being, obviously that's lower risk. And so that's kind of one of the measuring sticks of how risky your business is. Do you have face-to-face customers or not? And if you don't, then it's okay, you're more risky. You need to have all these different risk controls. How are you identifying customers, all that type of thing. And it's like, well, we're using IDPal or we're using whomever. And also I got a request today for, great, I could provide a copy of my passport to a business that I'm a director for them to recertify, but I need to get a certified copy of utility bill. I'm like, I have to take out my utility bill off of the website, print that out, bring it down to the guard station, which is the police station for our US listeners, and have them certify that is actually a true copy of my utility bill. I'm like, what, do I need to bring my freaking, laptop down there with me to show them how I printed it? It's like ridiculous. So that is just case in point that a lot of those old school regulations still exist here in Ireland because the bulk of business in Ireland, I don't know what the split is these days, but the domestic economy is here supporting the 5 million people here in Ireland. And the bulk of the regulation that has been built up over the years and, company regulation and company law is in support of the domestic economy. And it hasn't moved on yet. And it's going to take a long time for it to move on. Slowly and slowly and slowly. And one of the things I picked out was the European Banking Authority warns that talent shortage will hamstring crypto regulation. So this was in Finextra yesterday, the 2nd of August, and saying that, okay, lots of European regulators, it's hard for them to find talent. I'd say you look at any European country, it's like, where does the skill go? Where does the talent go? You go, that much about business models and go-to-market strategies and all those types of things for fintech, you're going to end up going to work for, a big consulting shop, right? Yeah. And you get paid 4 times as much as you might for, by a regulator.
Yeah.
So
what can you do?
Like, how does the FCA do it? Right. FCA people are, but someone pulled the plug from an FCA application recently. I forget who it was, but they said,
I heard, look, they're not covering themselves in glory either at the moment in terms of the delays and being very inward focused. So I suppose there was obviously a mandate there, and you look at countries like Singapore, there's a mandate there to be more proactive and to be more innovative, which is probably attractive then to someone who wants a quasi-government role and something interesting.
Yeah.
But, that's not the situation here, and it's not the situation in other markets. So you could see why there would be an issue. Why do you want to go and be the bad guy in those markets on the regulatory side? You don't really want to be.
Yeah. I think, getting all holistic and high level, I mean, banking technology and financial services technology back in the 70s was very, very slow moving into the 80s, into the 90s, into the 2000s. It took until the advent of fintech and cloud computing and mobile, in 2008, 2009, 2010 for technology to start moving a hell of a lot faster than regulation could ever try to keep up. And so we are where we are. I don't think there's much we can do about this at this stage, unless the regulators start just offering much better salaries to draw people in who want a 9 to 5 and be able to sit there and opine on the risk control model of a fintech or a crypto player, and be able to give them some good guidance and be able to, point them in the right direction. And I think I was going to say it's a long way off. I'm like, I don't know how, the two shall ever meet again, but,
don't think so.
Like even in the US, and just to call them out, I mean, the majority of law is being based upon, in the securities industry on 1933 law.
Yeah.
Right. That was a long, long time ago.
Yep. Yeah.
Nearly going on 100 years of that kind of ruling the roost in terms of U.S. securities law and financial services regulation.
Sure, even I've been following it closely enough, actually. The CFPB, the Consumer Finance Protection Bureau, they spoke out against Apple this week with their kind of pay later solution that they're offering, and they've come out against a lot of the big tech firms with the kind of from a data point of view, because they're looking at their equivalent of open banking and how that would work and the value of it, and they were quite. I suppose they were lukewarm to the idea, to the broader, idea of it or value that it can bring from a consumer point of view. But like that, they've been very kind of proactive with handing down fines on a number of fintechs, and like I said, coming out against Apple quite openly now this week around what they're doing with their consumer data as it relates to being able to offer products and stuff. So, it's there's very much seems to be an I wouldn't say anti-fintech, but somewhat anti-innovation in the financial services space anyway. In the US.
Oh yeah. I mean, US is a mess. I can say that. Balaji Srinivasan was on the Tim Ferriss show recently talking about, the difference between nation states and nations, in that a nation state is, well, you've got a nation, which is, a culture of people that are strongly connected by ideals, beliefs, and so on. And then you've got a nation state, which is, well, you put a government around that nation. And the US is now clearly 2 nations under 1 state, right? Which is not one nation under God anymore, indivisible with liberty and justice for all, like they teach us to say in the Pledge of Allegiance to the flag when I was in kindergarten, right? It's the red state and the blue state. Yeah. And, there's just so many different opposing views right now. The polarization of America is unbelievable. So there's a long arc to that.
Yeah.
And I don't know how that could ever be addressed, but I will remain optimistic that someone will come along and sort that out. On that note, there's a couple of firms here in Ireland that I know we need to bring up the curve in terms of, their view on crypto, their view on Web3 overall. And what I've done is I said, listen, rising tide lifts all boats. Let's get everybody up the curve to the same level. And I said, listen, I'll come and I'll spend a couple hours with you guys and just do a Q&A and answer all the questions. And because there are people who are strategically well positioned to really make an impact in this space, in crypto, in terms of the growth of that and the acceptance of it, and also the regulation of it, which obviously is something that is coming in Ireland. Well, it's happening in Ireland now. Gemini got the first one, the virtual asset service provider stamp, which is basically an AML KYC registration, saying that all your risk and controls around identifying customers and providing anti-money laundering controls and protection, that all of that is, it is up to scratch. And, that will roll into MiCA, the market in crypto assets, like we talked about last time in 2024. So all that is coming and all that is happening. So let's get people thinking about this strategically from a business perspective, from a customer and commercial perspective, and how we grow and develop that further. And I won't go on record here saying I'll offer that to anybody, but I will offer that strategically to
the right parties,
to the right parties with the right synergies.
Yeah.
Absolutely. So
no, but no, all joking aside, like, really where the opportunity is for regulators, and look, I'll just use the central bank as an example from an Irish perspective. But if you don't necessarily have a mandate to drive innovation or competition or whatever it is, at the very least, what they should be able to do, or what should the area of focus or whatever should be, is to have them engaged in the industry things. So, having industry bodies, pulling together reports and, creating kind of strategies around fintech or, narrower parts of it, payments, that sort of thing, without then, input or even oversight or whatever from the central bank or your regulator, like, that just doesn't make any sense. Surely everyone wins, like that rising tide. Everyone wins by having them all involved. So running an accelerator program and having a representative from the regulator be part of it. For example, like, with the Techstars program, for example, having the right person from the central bank in that scenario go on that journey with the companies surely is of benefit to everybody.
Absolutely. That's a great idea for the next one.
Yeah, but it just makes sense, because like that, they're keeping close to what's going on in the industry. They can see the different changes, the different challenges. Yes, they don't necessarily have to give advice. And, I know a lot of regulators don't want to be in a situation where they're giving advice, but surely, everyone benefits from the learning.
Hey everyone, this is Pete. Let me tell you about the folks at Philip Lee. A few years ago, I was at my first venture capital industry dinner in Dublin, and honestly, I felt a bit lost. I bumped into Andrew Tizali, one of the partners at Philip Lee. He bought me a pint and introduced me to the team, and they took me under their wing. That take you under their wing approach has been what I've heard consistently from fintech and crypto startups who I know have worked with Philip Lee in Dublin and London to help them wrap the right legal framework around their business, fundraising, and regulatory needs. And I can't recommend them enough. Get in touch with the team at philiplee.ie or on moneyneversleeps.ie/philiplee to learn more.
Yeah, but look, for example, obviously, I got huge learning from being involved in the Techstars program, and like that was for my own kind of personal benefit, but also from an organization point of view. We mightn't necessarily see many, as a state agency, mightn't see many Web3 companies at the moment, and obviously they weren't all Irish companies, so they weren't all relevant in that respect to Enterprise Ireland, but it was of benefit from a learning as to what's going on in the industry and seeing some live use cases.
Yeah.
So why wouldn't you apply the same thinking from a regulatory point of view to say, okay, well, let's just be involved in what's going on in the industry. Let's sit on the industry bodies, or let's as the industry body, let's share the information with the regulator, kind of real time. Why wouldn't we?
Totally.
So.
Totally. And I'm thinking of a few folks at the Central Bank of Ireland that I'd be happy to invite in to give them a look, that work at the innovation hub within the central bank. So I will be in touch.
No, and look, I've we're not. It's not a central bank bashing. It's just we're just using it as an example. But look, I've had very good engagement with the team there. They're very kind of proactive and very keen to understand.
I've had great engagement with the team there. And
it's more broadly, if the challenge from a European point of view is going to be, is the talent going to be there to kind of keep up with the market? Well, in the absence of it, well then, being as connected or having them as informed as to what's going on in the market, then at least is one way to kind of address that.
Yeah, absolutely. It some of it may be just too much involvement on the commercial side of things may then give the perception to the public that they have a competitive mandate, which they don't.
Yeah.
Right. So I think we got to find a happy medium there. And but on the note of crypto and Web3, we had a very interesting pronouncement from Vitalik Buterin, who is one of the co-founders of Ethereum and basically the leader of Ethereum, if we want to call him that, in that he was talking about the metaverse, and the metaverse being this, experience-driven simulation of the world. And that is starting right now with basically things like Sandbox and Decentraland and these flat 2D screen with some 3D imagery behind it, experiences that are meant to evolve into things like what we see in Ready Player One. And shout out
Yeah.
to Dave Henderson, who watched the demo day live stream on YouTube for Techstars and said, watch out for, we can play bingo with how many times Pete says Ready Player One, which he's probably right on. I'm reading Ready Player Two right now.
Oh yeah.
But I don't think that's gonna solve this. But anyway, what he's saying is that Facebook obviously changed their name to Meta. So Vitalik is talking about this and saying that the corporate version of this metaverse, this VR type experience, all built on blockchains, because blockchains enable this value transfer to take place in these public permissionless metaverse zones, metaverse experiences. He's saying that the corporate version just isn't going to work because people don't know what they want yet.
Yeah.
Right. So how do you actually put a big $1 trillion spend for some meta, or i.e. Facebook driven metaverse experience, and say that that's what people want, and have that people, spinning around in boardrooms with just these
Headsets
avatars
or whatever.
from
Yeah.
the waist up, right? And that's all you see. I just, and I'm tending to see it. And he made a very, very good point, is that people don't know what they want yet. And so when you're looking at this and breaking it down to the core of startups and the core of problem solving, when you know what people want, you know what problem to solve. With a brand new user experience, was the smartphone solving a problem? Was the iPhone solving a problem? No, it wasn't. It was giving people new options. It was giving people
Yeah.
new opportunities, new access that they hadn't had before, new ways of life. Even, Jesus Christ, with what's happened with smartphones and teenagers and whatever
Yeah.
you want to call it, right? But it's going to take a while for this to evolve, for another long arc. I keep saying that, but that he said that the meta version of the metaverse, or the Facebook version of it, will ultimately fail, because
Yeah.
how do you actually try to design something that big and that immersive and that expensive without actually being able to do some A/B testing and work on this at the consumer level,
Yeah.
with individuals who are already kind of up the curve a little bit with regards to, what a metaverse really means to them.
Mm. And it's an interesting point, because like he's spot on. I think Facebook was trying to, and I respect Zuckerberg's kind of vision as to where things are going. But like that, Facebook is probably not the right vessel, if you want to call it that, to, I suppose, bring the masses to the metaverse, because it feels like such a jump from their business, from why people are using Facebook in the first instance. Like, to me, and we've talked about it before loads of times, but to me, the metaverse kind of explosion, and what's going to drive users of the metaverse is something that feels not that different from what they're already doing. And to me, that's kind of gaming and stuff like that. It's as far as I'm concerned, my son is already in metaverse with the amount of times he plays in Fortnite, and he has his avatar and his skins and all that sort of stuff. So he's living in that environment already. So jumping to a new version of that isn't going to be a big leap for him. It is for someone using Facebook.
Yeah.
So to me, the adoption is going to come from that side of it. And I don't even mean just like from an age point of view, but more so from people who are already living in a kind of metaverse environment, or, on a regular basis, be it gaming or some sort of online experience, esports, that sort of thing. It's not a big jump for them.
Yeah. And that was, I was reading something else today that was about the alignment between esports and crypto, and saying that you've got a lot of people playing video games, i.e. esports, that are also mad into crypto. And you've got a lot of people mad into crypto that are also playing video games.
Yeah.
So there's this natural overlap there, and that's going to be the fastest adoption curve.
Yeah.
And you've got something like, 2 billion gamers worldwide, and that number is only growing. And Jeff Donnelly from MegaFan, shout out to Jeff, talks about getting the next 1 billion users of gaming online through mobile gaming. And so those that are that much into their phones and using mobile gaming that much, they're probably pretty comfortable with a crypto wallet. Okay.
Yeah, exactly.
So you got this natural overlap. And I will quote it again, but in Ready Player Two, it talks about how the Facebooks, YouTubes, Twitters of the world back in the 2020s, 2030s, all just became these kind of newsfeed type applications in the real metaverse experience. and that's all it was. It was just a way for people to stay connected to their friends. It wasn't a way for them to actually live these experiences, live
Yeah.
these virtual experiences. Or the latest words I've been seeing around this is, phygital. So this blend of physical and digital world. So, you know, but no, I think we've got just hearing Vitalik say that was just a nice kind of ticking the box for me and saying at least Vitalik is thinking about this and talking about this, which was good to hear, because so much of my belief for what's coming and where I'm looking for investments right now is along the basis of blockchains as a foundation for metaverses, right?
Mm.
And that you need that in order to have these public permissionless virtual environments where you buy that time machine so you can travel, back in time in the metaverse. That's an NFT,
Yeah.
right? And you need some type of, cryptocurrency, whether it's a stable coin or whatever it is, in order to buy that and to demonstrate ownership of it, and that it belongs to you, and that is a cryptographically secured relationship.
Yeah.
So, it was, all of it is encouraging, at least. And it's, but like you said, Zuckerberg has built a beast. He's got to do something with it. So at least he's giving it to go.
Yeah.
I'll give him that. Other things that popped up in the last week or two, or even the last week while we were gone, or while I was gone, was Umba, US-based fintech Umba, which is Irish owned primarily,
Irish owned and founded,
and managed, but they headquartered to the US a few years ago. They bought a majority stake in Kenya's Daraja microfinance bank. You had some thoughts on that.
I just think it's fascinating. I really like what the Umba guys are doing. I haven't had the pleasure of meeting Tiernan Kennedy and Barry O'Mahony in person. I obviously was familiar with them from a work point of view, and Brian McDonald, who we've had on the show, God, way back when, I know had been helping them back at the early days, and he had flagged them with us as well. But I know it was like at the time when I was familiar with what the guys were doing, it was microfinance or microloans in Kenya, which is really cool, kind of like the equivalent of a €2 loan for a 24-hour payback. I was just online lending is a particular area of interest for me, so I was fascinated with what they were doing even back then. And I think they raised a 15 million Series A earlier this year. And even coming into that, they had Tom Blomfeld, obviously from Monzo. ACT were in that, a couple of really well-known US investors or VCs as well. So look, they're doing really interesting things. And there's obviously going down this route. Then we talked earlier in relation to others about accessing a license and a bank and everything, and obviously being able to go and offer a wider range of kind of products now by obviously having that investment in a licensed bank. It's an SME bank, Daraja, they're saying. It's a small kind of market share, but obviously gives them a stronger presence and can offer more services. So yeah, really interesting move, and not one seen very often with an Irish company acquiring a kind of bank and a license like that. So play to the guys. I'd absolutely love to have them on the show to talk in more detail about what they're doing. So maybe someone can make that happen for us.
I've been on their mailing list, their investor mailing list, for a while, even though I never invested. But I will say this the Irish way, then I'll say it the American way. But Barry O'Mahony, as he's called. But if he grew up in the US, he would be Barry O'Mahony, right? So he always impressed with the detail and the clarity of their investor email, whether it's quarterly or monthly that they send out. Really, really impressive, and always wanted to forward that on to startups to say, here's a great example of what you should be aiming for.
You should.
But no, I can't, because he said, please do not forward this outside of this group.
Ah, okay. That's
because there's some confidential information in it.
Yeah,
so I never have, Scouts honor, Scott's, God's honest truth. I never have. So
it's a good point though, because actually I have, I've got 50 something clients on my portfolio at the moment. But I'd say of the monthly updates that I get, I have one or two that stand out for kind of clarity and information and kind of professionalism. And I mean, so for some I don't get anything, and then the quality is not great. But I have one or two that stand out as top notch.
Yep.
Really, it really shows that they're on top of things when they can provide a really strong update like that.
Oh yeah, and you know what I like as well is when people get back to me right away. The quickest draw in the East on this side of the pond is definitely Eoin O'Driscoll from Plandoil. He is within seconds gets back to me on Telegram. So shout out to Eoin. We're going to try to have him on the show in a few weeks. And then just when you ask somebody, hey, can you give me a look into this, and they come back so quickly is just so reassuring, right? So, but yeah, the clarity of information and be able to simplify things about a very, very complex business is definitely a great skill to have, and definitely, the Umba guys have that. So well done to them, and well done on growth and acquisition mode, and hopefully we see more of that. Anything else you wanted to touch on this evening?
Yeah, I had two, and like I was saying to you earlier before we started, I can't, for whatever reason, open up the articles, so I can't find the second one. But I had one, and like I said, I am fascinated, and it's my experience with future finance. I'm fascinated by obviously online digital lending. So US company Tomo Credit, TOMO, they raised 22 million at a 222 million valuation, with the goal towards making credit scores obsolete. This is an article from TechCrunch. So I've been keeping an eye on this one because it's a really interesting. Obviously, it's a startup targeting at young kind of adults, students, immigrants in the US who have no credit score. And ultimately, they're offering them a credit card that allows them to obviously borrow, but also build credit. Now, the thing I found really interesting about this one was that they have an auto repay. So how their solution works, they obviously don't rely on a FICO score. They come up with their own kind of proprietary underwriting algorithm, the Tomo score, and it has, there's no credit checks. They give them limits up to up to $30,000, it says here, but the default rate is less than 1% because it has instant or weekly repay. So it's you obviously connect your bank account to the card, and then it obviously will lend it to you and then take the money back out a week later. So, I suppose it de-risks it in that scenario. Now, what strikes me is how the hell do you borrow up to 30 grand if you have to repay it the week later? But
yeah,
doesn't go into,
I don't know.
Doesn't explain that one in the article. However, I just thought it was really interesting, kind of, obviously what I did in future finance, we were providing loans to students with little to no credit history given their age and everything. So, there's a big opportunity in a market like that, especially in the US where you've immigrants coming over. They could have had very steady jobs and really strong backgrounds in Ireland, for example, but they moved to the US and they have no credit history. They wouldn't have a credit score. So there's a real opportunity with it. Just an interesting kind of take on it. So that was a 22 million Series B. Yeah.
Well, maybe someone that Nubank eventually looks at, because Nubank are so just tech savvy. Yeah. I think I remember from their decision-making process on lending that one of the criteria was who referred them to.
Yeah, I remember listening to the guy on one of which Invest Like the Best podcast, and he had said the same thing. That's how they it's the referrals.
Yeah, whoever referred you to Nubank and looking at their score means that if you have friends that refer you and they're generally good, they haven't defaulted, then it generally means you won't, right? So that's mind-blowing that actually works.
That one's a bit out there, yeah.
It is. But, hopefully the days of credit scoring won't be around that much longer. But banking regulation and, it is the world we live in, and it's the way that the majority of the world operates, even though we're up the curve, and a lot of the people we talk to every day and hang out with are way up the curve, that is a very, very small proportion of the global population.
Yeah.
But it's good to be part of it.
Yeah, so look, that was an interesting one. I'll keep an eye on that one. And actually, I'll probably do my usual trick and try connect with Christy Kim, who's the founder, on Twitter, and see if I can get her on the show. Because I'd love to hear a bit more about what they're doing and how they're doing it.
Yeah, go for it. By all means.
Why not?
All right. Anything else to share?
No. Like I said to you earlier, I have a couple of days off at the end of this week for a wedding. So it's the first time I have my wife away from the kids in the last, since COVID, to be honest.
Yeah.
So long overdue.
Enjoy it. My wife and I had that in Lenox, Massachusetts, with that electrical storm back last month in July, which was awesome. So,
nice.
Love the kids, but obviously good to get away.
Yeah. And then we're back.
Enjoy that.
Back to our regular weekly schedule from September.
Yes, we will. Lots going on. Lots to ramp back up on. But let's do it right.
That's it.
Okay.
Take it easy, buddy.
Check you later, pal.
That does it for this week, folks. You can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor and advisor focused on where fintech meets crypto and crypto meets Web3. If you'd like to talk to me about your business, drop me a line on info@moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya!